Good morning. Welcome to Clubhouse Insider here for Monday, September 8th. So let's jump right in and see what's setting the stage for our markets and what we're keeping an eye on. So number one is the Fed rate cut outlook. So we had softer data, so now we have bigger expectations. But of course, there's always no guarantees. So the markets are now pricing in a really strong chance of a 25-point basis cut here in September. The meeting should be on September 17th. And there's even a small rising possibility of a 50-point cut. That's following weakening labor data that just came out on Friday. So the markets have been exploding as far as mortgages are concerned, and we'll show you what that looks like now. But experts caution that if they do go 50 instead of 25, that might limit further cuts beyond September. It's all data dependent. So the kicker here and why this matters is a Fed cut does not automatically translate into lowering borrowing costs or any kind of sustained rally. The stock market moves post-cut have been mixed. Markets often price in the cut before the Fed moves and then partially sell off afterwards, depending on the economic context. So lending, trends here, we'll take a look. So we've talked about this for the last few updates on the 10-year Treasury. We're looking for it to get close as possible to 4% or lower, even showing a 3 on it would really hit the numbers. Basically at 4%, which is great. So now if we can get that underneath, and we're going to start seeing some numbers that are really good, and that what everyone is hoping for. So you can see here that the 30-year fixed rate is as low as it's been in a year or more. So 6.29% on a 30-year fixed. You can see here too that on FHA and VA, we have entered the 5s. So take a look at that. That's really great news. This has been an awesome rally for the mortgage rates. And then, of course, what they directly related with the bond markets. And you can take a look here. This is 1 year. So September to September. Just look at what's happened since the end of July for mortgage rates. Look at that. That is exactly what we're looking for affordability, help. And interest rates coming down, opportunities to refinance are here. Now, if it's going to be the right thing for you or not, we got to really get in discussions about that and see exactly what we need to do. But you can tell from a year ago till now, we are on the right trajectory finally. So if you are sitting on the fence or looking for a refinance or any kind of savings decision, now is a good time to lock in favorable terms and really big jumps that the market has presented us. So while keeping in mind, though, that future changes could go either way depending on how inflation and really things like the jobs data shake out. So the market is handing us savings right now. In the last year or two, most equity positions have not really improved dramatically. So taking the gift of a lower rate for a better payment is the opportunity that we've been handed in this current market. So we're going to keep taking a look out and keeping our eyes peeled, on inflation, jobs data. This week alone, we've got preliminary revisions that come from that jobs report, CPI, PPI, so inflation. Knowing full well, even if we do get a cut, uncertainty may keep volatility elevated. So hang in there. If you have questions, please reach out. Have a great week and continue this rally. And next week, we're even more excited about the markets than today.